anyone with a sense of contrarian mentality had to look at interest rates in the early 1980s as presenting a potentially great opportunity. We knew the Fed would have to ease as soon as business started to run into trouble. In addition, we had already seen
good morning, guys. Good morning. Trust everyone's doing good. This is going to be the session that we're supposed to have done today. Say hi, guys. Okay, this is a session that we're supposed to have done yesterday. Okay, but due to connection, obviously we couldn't achieve that. So just decided to record a session offline, right? And then I'll be posting it in the Telegram channel for you guys to actually go over. Right now, if you were in attendance in Tuesday's session, okay, you will know that we actually restarted the entire program, and right now our focus is going to be on candlestick patterns. So we're just going to be taking a look at what the important parts of a candlestick pattern are, right? How we can actually take signals using candlestick patterns and stuff like that and make trading decisions just off of that. So that should be quite interesting to some of the more newer guys, but to the guys who've been around, this should be information that they are actually familiar with. I'm going to take a moment then, since we're not going to be taking any sort of questions and stuff like that. It should be a very brief session, and then after this one I'm just going to be doing the beginners session. I'm also posting that in the Telegram channel. Okay, now right now we're currently looking at the Euro USD on the H1. Okay, on the 1 hour time frame, you can see it's clean, nothing is on the chart except these Japanese candlesticks. And one of the most important things about the Japanese candlesticks is that they are visually appealing, right? You can get a lot of information just by taking a look, just by glancing over them, right? You don't have to do a lot of deciphering about what does this mean, what does that mean. You can just see, just by the way the candlesticks look, that we are in upward trend, right? There's a potential for a reversal with a rejection candle, for example, and all of that information is readily available. You don't have to dig for it because you can actually see it from the chart. Okay, now as easy as or as simple as that does sound, there are other elements to candlestick patterns, to these Japanese candlesticks firstly, and then to candlestick patterns secondly, that we need to sort of like familiarize ourselves with in order for us to make trading decisions, whether to actually get into the market and as well to actually get out of the market if there's a potential for us to take some profits. And for example, we've been in a trend for the past couple of weeks or so, and we start seeing some very fishy looking candlestick patterns. We'd like to obviously have the right sort of information for us to make that decision. Now, what candlesticks do provide is past data, right? They show us what has happened in the market. They do not tell us what will happen in the future. So there is no such thing that is readily available in the markets right now that can give us foresight about what is going to happen exactly in the market. Okay, we may forecast and do predictions and all of that other stuff that people try to do. However, the most important element that we need to know or that we need to focus on is ensuring that we have a game plan and we follow that game plan. That's it. So isolate just a few candlestick patterns, right? And we work with those candlestick patterns and we add 2 or 3 more elements to them that will help us to then decide whether we actually get into a trade or we get out of a trade. Because what we look for are high probability trade setups, which means any setup that has a much higher probability of working out. So let's say probability of the trade working out is 8 out of 10, right? By working out, I just mean making profits. That's not the correct term, but I have an 8 out of 10 potential profit with that type of setup, right? And that is because obviously I've done the testing, whether it was just back test or forward test or whatever the case may be. Then some setups have higher probability than others, and therefore we look for those high probability trade setups over those decent probability trade setups, which obviously should make sense to you guys. So one of the most basic ones. All right, let's just move on to these higher time frames. Right, we're looking at the 4 hour. Now, by the candlesticks, we can see that a lot of the times they are wicky, right? Wicky, or have pins, or have these shadows on the ends, especially in areas where we feel like there was a turn. All right, so the market turned. Okay. All right. Let's just. Okay, so at market turns, we usually have some very important keys or some very good insights about what the market could potentially be doing, right? So what we try to do then is try to make as simple, a very simple rule-based system that is going to tell us when these sort of trade setups actually develop, right? So when this happens, we want to be able to say, all right, this is a high probability trade setup, therefore I'm looking to go short over there, and here I'm looking to go long. And also here I'm looking to go long, so forth. Okay. Now, one of the most common places where these candlestick patterns will develop, right? So these candlestick patterns will develop around support and resistance areas. Okay. Now, this is a support level simply because you can see the market pushed away from it previously and came back into that same area and then rejected again. Okay. And then it came back the third time there, same level, and just took off from there. Now we had a hint in a candlestick pattern that usually develops on 1 hour time frame, as does on the 4 hour, weekly, monthly. Okay, so this is what some call a double bottom, right? Okay, so some call it a double bottom, some call it a W formation, double tap, whatever you want to call it and you want to term it. It's not really that important, as opposed to how you then trade that particular trade setup. Okay. Now, you see rejection, right, at 109.92, and market came back in again, rejected again, and it came back again, which means we have some sort of a smaller double bottom develop as well here. Okay, so we sort of like have a W within a W, or a double bottom within a double bottom. So with time, we're going to be able to distinguish which ones are shorter time frame and which ones are longer time frame. Because at the end of the day, you are going to have these sort of markets where we look at and be like, all right, okay, so you basically have a double bottom within a double bottom. Okay, now if you're looking at a 4 hour time frame and this sort of develops, then the trade might stick around longer. You might stay in the position a bit longer than you would on a 15-minute time frame, and you see a double bottom, for example, on a 4 hour time frame and a 15-minute time frame. So the higher time frames, as you guys should know by now, take preference over the smaller time frames. Okay. Now, one of the most important key elements with understanding these patterns is which trend in which they develop it, right? So if the market is in an upward trend, a very strong upward trend on the higher time frames, then you are predominantly looking at buying opportunities long term on that particular currency pair, right? If it's in a short, if the market is going short or it's in a bearish tone, decline, sell off, then you are looking at short opportunities predominantly over long opportunities. I trust that makes sense. So with this sort of double tap scenario, then we look at the actual candles themselves, because as much as we might like to think that it's just as simple as looking at a support structure and then the market comes and touches that support structure again, we're not sure if it's going to break it or it's going to continue to go up, because we must remember that this was a resistance level previously, right? The market came in, boom, tagged that level, boom, came in again, and it touched that 111.07 level, right? And as soon as it touched it, what did it do? It broke above it, right? Okay, so what you want to do is to wait for the candlestick pattern to actually confirm and give you an entry signal in the right direction. So that is achieved by what type of candlestick pattern actually develops there, right? Now, this is what's called an engulfing, a bullish engulfing pattern, right? You guys know I'm not too big on just the candlestick patterns and all these fancy names, because the only thing that I like to see is a long wick, right, and a short body in the direction that I'm looking the market to go into. So in this particular example, we have this long wick to the downside, and then we have this short body on the upper level, which sort of like is a pointer. It's like it's pointing upwards, right? Like this is the direction that we actually go, all right? And then we have confirmation candle, which then, if let's say you were a bit uncertain about the currency, right? So let's just use this as an example. Okay, so let's say we have this very small rejection candle, right, which we're not quite certain of. Then you'd have to wait for the second candle to come in and close either higher or lower than the previous one. Okay, so this is a very important piece of information, because then it tells us that the momentum is starting to shift to the upside, as opposed to this one, which basically didn't work out, because you can see even the candle closed above that resistance level. Okay, then came back into it, boom, rejected, which is another candlestick pattern that we're actually going to take a look at. This one is my favorite. I actually did take this trade. And then reject, and you see the market take off from there. Okay, so that is a basic breakout with a rejection candle. And if you take just a few of these, you can make a very decent profit within the market. Okay, if you'll be able to identify and consistently hit the target on this one. By hitting the target, I don't mean just always making money, but by making sure that the trade setup itself is the one that you like, then you're definitely going to be in a very, very good position. Okay. So what we basically then look for is this rejection candle. And once we get the rejection candle, that is where our entry usually is. Now I know a lot of the much more experienced guys, like myself sometimes, will take a trade like this, let's say using a buy stop, because this was a buy stop for me. I wasn't awake and just waiting for this to develop. So I just placed my buy stop at 1107 something. I think it was a bit higher than this one, but it was somewhere around that vicinity. And when you get that sort of rejection, it just confirms that you're in the right direction. So even if you do get in a bit early, when you get the rejection and the market doesn't close, so if you don't get a full body candle closing below this 111.07 level, then you are certain now that the setup itself is completed. It's not certain that you're going to make money, but the trade setup itself is 100% complete. Okay. All right. Okay, guys. So I will be posting this in the Telegram channel, right? And from next week, I might do a bonus session during the course of the weekend, but next week, Tuesday, we should be able to do our next advanced session, right? So we're just going to do the second part of the trade setups, or the candlestick patterns rather. And once we complete that, we'll move on to our Fibonacci levels, which should be very interesting for a lot of the more experienced guys as well. Yeah. Hope you guys enjoy the rest of your evening, or rather your weekend. Just enjoy your weekend, guys, and I will see you guys. Hopefully, I'll make time during the course of the weekend, but if I can't, I'll see you guys on Tuesday. All right, cheers.